As the future of finance evolves, so does the way we plan for retirement. Tokenized annuities, powered by blockchain technology, are transforming traditional retirement income strategies by offering greater accessibility, transparency, and liquidity. In this segment, we'll explore how these digital assets combine the stability of annuities with the efficiency of tokenization, opening up new possibilities for secure long-term income in the digital age. Today we will talk about building retirement income with tokenized annuities. So before we start, make sure to hit the like button and subscribe to my channel. 1. The retirement income dilemma in a changing financial landscape. Retirement planning has long been centered around generating a stable income stream that lasts throughout one's lifetime. Traditionally, retirees have relied on a combination of Social Security benefits, pensions, savings, and annuities. However, with the decline of defined benefit pension plans, increased life expectancies, and unpredictable market conditions, securing guaranteed income in retirement has become more challenging than ever. In this evolving financial environment, investors are seeking innovative solutions that balance long-term stability with flexibility. Tokenized annuities, a digital transformation of the age-old annuity product, are emerging as a novel instrument that could reshape retirement income planning. By leveraging blockchain technology, tokenized annuities aim to combine the benefits of traditional insurance products with the efficiency, transparency, and accessibility of decentralized finance (DeFi). 2. Understanding traditional annuities and their limitations. Annuities are insurance contracts that provide regular income payments in exchange for an upfront premium. There are several types, including fixed, variable, and indexed annuities, each offering different levels of risk and return. The appeal lies in their ability to guarantee a steady income for life, offering peace of mind to retirees concerned about outliving their savings. However, traditional annuities come with notable downsides: high fees, lack of liquidity, opacity in pricing structures, and complex contract terms that can deter even seasoned investors. Moreover, accessing annuities has typically required going through insurance brokers or financial advisors, limiting availability and flexibility. These issues have prompted a demand for more agile, investor-friendly solutions that maintain the core benefits of annuities while addressing their drawbacks. 3. Tokenization and its role in financial innovation. Tokenization refers to the process of representing real-world assets as digital tokens on a blockchain. These tokens can be easily traded, fractionalized, and programmed via smart contracts to execute predefined actions. In the context of financial products, tokenization enhances transparency, reduces settlement times, and lowers administrative costs by eliminating intermediaries. When applied to annuities, tokenization can revolutionize how these products are issued, managed, and transferred. Each tokenized annuity could represent a specific share of a pooled annuity contract, giving investors exposure to guaranteed income streams while benefiting from blockchain-based efficiencies. Smart contracts can automate payouts, enforce terms, and adapt to life changes, such as mortality or withdrawal events, without manual intervention. 4. How tokenized annuities work in practice. Tokenized annuities operate similarly to traditional annuities in terms of payout mechanisms, but differ significantly in their structure and accessibility. A user can purchase a tokenized annuity through a digital platform using fiat or cryptocurrencies. The funds are pooled and managed by a licensed insurer or a decentralized autonomous organization (DAO), depending on the model. Investors receive tokens representing their share in the annuity pool. These tokens entitle holders to regular income distributions, which are executed through smart contracts and recorded immutably on the blockchain. Additionally, tokenized annuities can introduce secondary markets, allowing investors to sell or trade their tokens if their circumstances change, a flexibility unheard of in conventional annuity products. 5. Benefits of tokenized annuities for retirees. One of the most compelling advantages of tokenized annuities is accessibility. Investors around the globe can participate without the need for complex paperwork or intermediaries. Fractional ownership enables people to start with smaller contributions, democratizing access to income-generating retirement products. The transparency inherent in blockchain systems allows investors to audit the performance, fees, and payment history of annuity pools in real time. Additionally, liquidity becomes a viable feature as secondary markets for annuity tokens can emerge, giving holders the opportunity to liquidate positions without harsh penalties. Lastly, the programmability of smart contracts means that income payments are automated, reducing the risk of administrative errors or payment delays. These innovations bring a modern edge to the centuries-old concept of lifetime income. 6. Regulatory and security considerations. While tokenized annuities offer exciting prospects, they also pose regulatory and compliance challenges. Annuities are insurance products, and in most jurisdictions, they fall under stringent regulations to protect consumers. Issuers of tokenized annuities must navigate complex legal frameworks to ensure that offerings meet insurance securities and data protection standards. Regulators are still adapting to defy innovations, which means some tokenized annuity products operate in legal gray areas. Additionally, smart contracts, while efficient, must be rigorously audited to prevent vulnerabilities that could be exploited. Custody of digital assets, investor identity verification, KYC/AML, and compliance with international standards remain critical to building trust and avoiding legal pitfalls. To succeed, issuers must collaborate with regulators, insurers, and technologists to create secure, compliant products that bridge traditional finance and decentralized infrastructure. 7. Institutional and market adoption trends. Interest in tokenized retirement products is growing among fintech firms, insurance companies, and institutional investors. Companies like Franklin Templeton, Hamilton Lane, and Allianz are exploring or actively developing blockchain-based investment products. Startups in the DeFi space are building infrastructure to support tokenized fixed income streams, with some platforms already offering decentralized insurance and retirement savings accounts. Tokenized annuities can also appeal to pension funds seeking yield-generating alternatives that offer predictable cash flows. Partnerships between traditional insurers and blockchain developers are crucial in creating hybrid products that meet both regulatory and technological standards. As market infrastructure matures, including compliance tools, custody solutions, and user-friendly interfaces, tokenized annuities are likely to become more prevalent in retirement portfolios. 8. The future outlook. A new paradigm for retirement planning. The convergence of blockchain and retirement finance signals a paradigm shift in how individuals secure income for their later years. Tokenized annuities could become a cornerstone of a more inclusive, flexible, and transparent retirement system. By removing intermediaries, reducing fees, and introducing liquidity to previously illiquid products, tokenization has the potential to unlock new value for retirees. However, broad adoption will depend on user education, regulatory clarity, and trust in digital systems. Financial advisors will need to adapt, integrating these tools into holistic retirement strategies. Governments and regulatory bodies must provide frameworks that protect consumers while fostering innovation. If these elements align, tokenized annuities could democratize access to lifelong income, helping millions achieve financial stability in retirement in a digital-first world. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.